All right, welcome. So today we are talking Florida title insurance. It's a huge part of real estate transactions, real estate in general. And I find that most people really don't even know what's involved with it, to be honest. They handle the back end. They're told that it's part of the closing costs in a transaction. And I feel like it's one of those categories that you don't realize how much you need it until something comes up where you do need it. So, but what I'm going to do today is we've got an expert on the other end, my guy Kirby, who we send all of our Kirby Williams with Shoreline. We send all of our transactions through them with purpose. We'll talk about that in a second, but let's just bring Kirby in here and we'll get rolling. Man, I got to put the glasses on. That's how bad this is. Let's do it. Kirby, you there?
I'm here. Good morning.
Morning. So Kirby, I'm going to do it like this. So I gave you a bit of an intro, but give me your little 15-second like company, how long you've been doing it, where you're located. Give everybody that piece.
All right. So I've been practicing real estate law in Florida since 2000. And we opened Shoreline Title, and we have a law firm, Barker Williams, but Shoreline Title has been around since 2017. We were located in Grayton Beach. And we are one of the last few independent title companies that's not tied to a developer or a brokerage company. So we hold a little pride in that.
Yeah.
Right now.
Yeah, that's interesting. I mean, that's been, Kirby, don't you think that's been, I mean, you're in the business. I see it on the peripheral, but that's been something I've noticed. Maybe, I want to say since COVID, has it become more popular or has it been before that?
When I first moved to Florida in the early 2000s, there was a little bit of that. And then it went away after the bust, and it wasn't quite as profitable. But it has come up, I think, since COVID, because that was the next big run on real estate here. And I think you're right. That's a good marker for when that started. You started to see more of it.
Yeah. Do you think that's just more like people just trying to keep as much, I mean, like they're like, feel like it's going out the door. So you're like, okay, look. And I mean, I get it from a business standpoint. You're like, all right, title insurance, we're going to be doing that on every transaction, right? Or mortgages, they're 90% of our business is mortgage, whatever. So you're just seeing everybody just be like, all right, we got extra offices here. Let's keep it all in house. Is that the vibe from it? Or is there any other reason other than seeing opportunity?
I think it's seeing opportunity.
Yeah.
And then and from the brokerage end, and then from the title agent end, they're wanting to capture as much of that business as they can. So they're willing to, team up with a brokerage and do that. So, I mean, it's not a bad business plan.
Yeah.
We have seen and heard of a couple of, there's been some disputes between those partners here in the last year or so. From our perspective, we've looked at it, considered it, but I think from our perspective, we don't want to turn off Casey and be tied to another brokerage, and Casey might not be willing. We got a lot of great agents that use us, and so we love those relationships, and we don't want to hurt them by teaming up with somebody else. So we hadn't seen the advantage from our standpoint of doing that.
Yeah, no, that makes sense. I'm glad you brought that up because I've seen that trend. And honestly, with people watching, they could get confused by that too, right? Like you got independent and then you got some brokerage saying we got our own. And so that gets a little confusing. So let's lead off with this. You've been in the business a long time. Just in general, I'm going to ask you this question because I'd say 1 out of every 30 transactions, somebody will say, hey, Casey, I see that as a closing cost. Why do I need title insurance? I mean, do I have to get title insurance on my transaction?
Right. Great question. No. The quick answer to that question is no. You don't have to get it if you're paying cash for your transaction. The significance of getting it is it protects you from the unknown. A couple of things there. So just as an example of things it protects you from would be you, the owner, the purchaser. It would protect you from a faulty deed, a forged deed. If there was a mortgage or a lien or a judgment lien that was not caught in the title search, it protects you from that. When you send Shoreline Title a contract, we get that started. We open the file. First thing we do is order the title search. And then we'll get that title search back, and it'll show all the encumbrances that the title searchers found we use our underwriter for our searching. So they're in-house. And so they're comfortable with the searches they do. And then the title commitment will come back with exceptions for things that they found on title that says, for instance, like the declaration of restrictive covenants, they can't insure title over those restrictive covenants. Most owners in our market, if not all owners in our market, recognize that, and they recognize the value in having the restrictive covenants, or not having them.
Right.
It goes both ways. So, if you're paying cash, and I have buyers that will call me and say, "Hey, do we really need this policy?" I'm like, well, it's similar to other insurance in that you never need it until you need it.
Yeah.
Is one way to look at it, but it is a one-time payment. It's not an annual payment. It's a one-time payment, and the properties we're dealing with down here are significant, from a value standpoint. And so the cost of that title insurance, while not cheap, it's or inexpensive, it's pales in comparison to the value of the property. One thing I tell owners that are paying cash is, hey, you don't have a lender to fall back on for 80% of the value of this property. You own 100% equity. You hold 100% equity in this property. Why not protect that equity?
Yeah.
Now, if you are financing it, if the purchaser is financing it, the lender's going to require it.
Yeah.
And so they're going to require it to the extent of their loan. And so in that case, there's no reason not to get an owner's policy at the same time. The purchaser does not have to get an owner's policy if his lender, he or she's lender, is getting the policy. But Florida allows for and requires a simultaneous issue rate. So you get a lot better rate. You're basically paying for one policy, and you're getting two out of it, the lender and owners.
Yeah. Kirby, is the title insurance policy itself, like the cost of it, is that something that is shopped in the marketplace? Like, okay, these guys are at 6,500, these guys are at 7,500, like, or is it pretty uniform out there?
It's what they call a promulgated rate, which is set by the state of Florida.
Yep.
So we have those rates, and I think it's the same rate book that we had when I was here in 2000. So
okay.
It hadn't changed. It may have changed right after I got here, but as far as I can remember, it has not changed. It's been the same rate book.
Yeah. Right. So just goes up as the value of the home goes up, and just based on that. Yeah.
That's right. That's right.
I'll tell you this one thing, I've used you guys for a long time, mainly because, we've been through, not everything's smooth, right? Like the smooth stuffs anybody can handle. And then you guys you're a great attorney. You got Farrah there. Like if anything comes up, you guys are ready for it. But I'll tell you this, since COVID, like with all the searches you guys do on the back end, you tell me if I'm wrong, I've encountered more open permits on projects than I have any of my I've been in 17 years, the last 5 years. I'm not shocked anymore that these projects in the busy time of COVID seemingly were just not getting closed out appropriately. And we're kind of trying to track down contractors and stuff like that. Are you seeing the same thing?
Yeah, we see a lot of that. And that's actually more of a contractual issue. It's not that we can insure title with an open permit on the property. Our form of contracts that y'all use and we use in Florida allow for a search. We search as part of our due diligence for closing. We do search the municipal records, in our case, the county records, and look for those open liens. There's a lot of pool is a big one.
Yeah.
The pool contractor doesn't close out the permit, and that's a life safety issue. So if I'm a buyer, I'm going to want to make sure that permit's closed out. From a title standpoint, from a closing standpoint, we can still close on that.
Mm-hmm.
We don't like to. We prefer everything to be clean as possible. But from a buyer, if I'm a buyer, I'm going to want that permit closed out because I want to make sure the county's gone out there and made sure, from a life safety standpoint, everything's built to code, and and I'm protected from that standpoint as a homeowner. You want to make sure the latches on the fence are working and are to code, because nobody wants a young child or anything stumbling into their backyard with a pool. So that's a big one we see, and I suspect you see a lot of as well.
Yeah, we do. So yeah, that's a very good point. Like I think that we're spoiled by the fact that it's just part of the process. And I would not be convinced if people were going without title insurance that anybody's searching the back end for those open permits.
Yeah, yeah. And we've had those municipal lien searches are several $100s. That they cost to do those searches. There's a third party that does those searches, but we've had some instances where say Casey is listing a property and he wants to go ahead and get out ahead of that. And he'll say, "Hey, Kirby, can y'all perform?" And it does cost, but the most the sellers, they want to get ahead of it too. They don't want to know if you don't want to be caught off guard once they get a contract and got to clean that up. So sometimes you can find out ahead of time, kind of get ahead of it.
Yeah.
Search.
Give me the ugly stuff just so people understand. Like, give me some examples of, man, I'm glad they had title insurance because this kind of came up. Like, because honestly, Kirby, I would say, early on in the transaction, at least, or then callbacks, it seems to be a very small percentage that it's out there. But also and this, especially like in your spot where you are, there's some neighborhoods like even Grayton where sometimes I feel like they drew those plats out on a napkin and people have horse traded, back in the years. And, and I remember a situation in Funiac where somebody else showed up with a different survey than the one that people closed on, with it. But talk to me about like the stuff that people do run into where you're glad they got had that property insured on the back end for the title.
Yeah. So one thing that we see a lot of is survey matters. And a lot of people forego surveys. That's one thing I always recommend buyers to get a survey. Many times in our market, a seller is going to have an existing survey, which shows all the existing improvements, and they can sign an affidavit saying, "Hey, nothing's changed. There's no new walls or pool or what have you that would affect the setback lines or anything like that." So surveys are big, in my opinion. Always recommend them when people ask. That nobody wants to get them. Get them from a reputable surveyor. A cheap survey or inexpensive survey is not always a quick and inexpensive survey is not always the best way to go. There's a reason they're inexpensive and quick. Sometimes you get what you pay for on that end.
Interesting.
So the survey is a big one from a title standpoint, because we can insure over matters of survey if we have a survey. We aren't insuring, when I say we, the underwriter's really the one insuring. We aren't insuring that the survey is correct. That's the liability policy of the surveyor that we'd go back on that. But we do insure the matters that are shown on the survey. So from a title standpoint, I think from a HARA standpoint, I mean, easements is a big one. If an owner or a purchaser buys a piece of property, and let's just say it's a vacant lot, and they don't get title insurance, they don't know what kind of easements are out there. They don't know what their building footprint is. They don't know necessarily where they can build and where they shouldn't. They could build, and then somebody says, "Hey, I've got an easement across this property. You can't build that." And then they have to tear down their improvements. Now, let's say they got a title policy and there was no exception for any easements. And somebody comes back later and kind of like your folks did maybe and shows an easement, says, "Hey, I got an easement across this property." Well, it didn't show up in the title search. We're human. We miss it. Maybe AI is going to solve that one day. And but the searchers miss things. And we're insuring over them missing it. So if they miss that easement, then the owner takes that policy and files a claim and says, "All right, title underwriter, handle this for me. It's not my expense. Either pay the person for the value of the easement or litigate it, or and the underwriter is going to make that call, but they're going to do what's best for the owner, so that they put them in a place where they would be if the easement had not been recorded."
Kirby, if they don't have a survey, do you really have much to stand? I mean, you've got a policy, but I mean, what are you really how big of a fight do you have if somebody comes knocking on the door with something like that, if you really didn't kind of write that policy with some kind of survey in place? Like, what are you really countering them with at that point?
Yeah. For instance, on the easement issue, like I just discussed, that wouldn't be survey wouldn't be as big of a matter, because it may or may not would have shown up on the survey.
Right, right.
So that wouldn't have mattered. Now, I have working on a matter right now that the property is described. It was a meets and bounds legal description. It's not a lot and block legal description. And there's an undeveloped lot. Owner's now going out to get a construction loan, and there is the lender. They didn't get a survey, but the lender is requiring a survey, like all lenders do. And while the legal description is the same, it's showing up different than the buyer thought it was when he bought it, because of the lines and what's grown up here and there. Actually, a big gap in the property, and he wasn't aware of it. In a meets and bounds description, you're kind of just guessing. Yeah. You're walking out and looking at the property, and if there's nothing being developed on either side of it, you don't have a good idea of where your boundary is, and it's a problem now.
Yeah,
he had title insurance, but he didn't get a survey when he bought it, because he paid cash for it. So things like that. I mean, that is hard.
Yeah,
he's got what he's got. He's got a policy. It's insuring the legal description, but they aren't insuring that any kind of picture of the property that says this is what you got.
Yeah. Do you one thing I run into with surveys is that if it's in a platted neighborhood, a lot of people are comfortable foregoing a survey because it's been kind of platted out. But I mean, ultimately you still need a survey, because then we're talking about encroachments, or, and those things aren't perfect too. Am I missing something there? Is that a more comfortable thing if there's a community plat map? Or?
Well, yeah, you're right. You identified the issue. A plat's not going to show the homes built on it. It's just going to show where the lot lines are. The plat. And I will say that with your watercolors, your Alice Beach, Watersound, these master plan communities that have architectural review boards, they require a survey prior to. I mean, once the foundation's done, they require a foundation survey, and then they require an as-built survey. So if there's encroachments during construction, those are going to be identified. Somebody's going to find those before it's too late. Now, just because they find them doesn't mean that a future owner ain't going to have a problem with it. It doesn't ensure that issue. And a lot of times you're going to have, particularly with the communities that have the zero lot lines, you're going to have a little encroachment here and there. A couple inches here, a couple inches there, when these homes are built right up against each other. And a lot of times the restrictive covenants for those communities will include an easement for a little bit of encroachment here and there, because they recognize that's going to happen out in the field. So there's an easement of record for things like that. Pools, when people put pools in after they've bought the property, the home's already built, if they put a pool in, well, pool contractors, a lot of them are really good at staying within the building setback lines. They have to get permits. The county's good on checking that, making sure, but sometimes it's not always built the way it's permitted to be built.
Right.
And pavers going in. Pavers is sometimes an easy one, because you can go out and just pick the pavers up.
Yeah, move them. But I mean, I wanted to ask that. So, I mean, let's say I don't care. I'm going to build a structure. Like, I build an outdoor pool set up with like a kitchen, and it's pretty substantial. Like, I pour some concrete footers, and a survey comes back and I've encroached on a property. Like, I guess they can come through and require me to take that structure down? Is that?
When you're saying you talking about the county or the association, or? That's
a good question. Like, I guess would it be the county that would enforce that after getting a challenge from a homeowner adjacent? Is that kind of how that process would work, I guess?
Well, most of on the master plan communities, most of the restrictive covenants give each of the owners I should say some of the declaration of restrictive covenants give the owners the right to have an action to enforce the provisions, to keep your neighbors honest, so to speak.
Yep.
The association certainly would have that authority given to them in the declaration. Now, if it's sometimes the neighborhood covenants don't have the same restrictions that the county would.
Right.
But then the county would be the one that would have to enforce that. Practically speaking, the county doesn't really police that.
Right.
Is what I found. And so if you did what you're saying, a lot of times it's just going to keep going. And if I'm issuing a title policy, I'm going to have an exception there.
Right.
An exception for the encroachment of the outdoor kitchen.
Yeah.
And buyer, that you're getting it. One defense to a title claim is if the buyer or the owner that has the insured, if they have knowledge of the easement or the encroachment like that, that's a defense to having to pay a title claim. So a buyer just can't say, well, yeah, I know about that encroachment, but I got title insurance insured over that. Well, that's not
right
for a little reality check. And
and
I don't file claims, so I don't get into that work. We're mainly on the front end.
I think it's fascinating. So basically, as somebody that has a title company, your word of advice for any buyer would be have a survey that shows everything existing that's on the property, get the title insurance. Is there anything else in the kind of that, hey, these are the things that I would definitely do from your end? I mean, I know that covers a lot of what you guys do, but I mean, is there anything else based on your experience you would say, hey, don't move forward without this if you can help it?
Yeah, well, a couple of things. So one point that I want to bring up is that as a title company, we Shoreline is not, or any title company is not permitted to do a closing where it is not issuing a title policy. So if you came to us with a buyer that wanted to purchase a piece of property, listed Shoreline as the closing title agent, and they decided they didn't want to insure their property with a title policy, Shoreline could not close that. That is issuing a deed or preparing a deed is the practice of law, and a title company is not permitted to do that unless a policy is being issued. So in that case, we have Barker Williams, a law firm. Easy transition,
right?
And it's going to cost a little more to do that. And so sometimes the owner says, well, you know what? If I'm going to end up paying for a law firm to do it, I might as well just pay for the policy and get Shoreline to do it. So that's one thing. One thing that we've run across over the last 10 years or so is like you mentioned in Grayton Beach with things being drawn on a napkin. A lot of times you'll have people just Kirby and Casey get together for lunch and talk about, hey, I'll give you half this property over here. You give me whatever, you write me a check, I'll give you half this property. And so I do up a little deed and we split a lot, a meets and bounds lot, and I convey the property to you. That is a valid conveyance. But what you and I didn't do was check with the county and get a permit to subdivide the parcel. There's certain exemptions that the county has that we may have fallen under. But, a lot of these communities, kind of like Grayton to some extent, Grayton's a little different because there's a plat from 1902 or something like that.
Right. Yeah.
Some of them were just drawn up and started conveying parcels out. Now, some of those are grandfathered in, but in the 1997 is when the first Walton County Land Development Code kind of identified the subdivision requirements. So where I'm going with that is, you come to me later wanting me to close, you're selling the parcel that I deeded to you. I can convey it. It's a valid conveyance. I can insure title, but then you go to the Walton County to get a building permit, and they're like, hey, this is what they call an illegal lot split. We won't issue a permit because it was not split legally through the county code. We have run into that a couple of times. So where I'm going with that is if a buyer is buying a meets and bounds property, this wouldn't be applicable in a platted subdivision because they had the plat, it was approved by the county. So it was a legal lot split. So in the meets and bounds, that's something to look at, to go to the county and say, hey, want to make sure I have this lot. One way to do it is, hey, if I'm going to build, I know what I want to build. So I want to go to the county and sit down with them, make an appointment, which I recognize is hard to get sometimes, but
Right.
sit down with them and say, hey, I want to build it on this lot. And they can look at their records and say, yeah, okay, this is a legally divided or illegal subdivision of a parcel. And, you know, and go from there. And that gets overlooked a lot.
Yeah. Yeah.
We can still ensure that title work on that.
Yeah.
Even if it's an illegal lot split, and that's not something that shows up in title. That's not something the title company is necessarily looking for.
Right. Yeah. And that happened, man. It seems easy enough. And people just live by the fact that, hey, if we got a contract between us, we're good. Right. Yeah. And, you know, and I've seen it. I've been looking at houses for people, and I'll see that the house is straddling 2 lots and the county still has it as 2 lots. And I'm always like, okay, like, you know, I know they can't get a permit if it's like over, unless they got permission to make it one, you know, however they did it. But that too can get tricky, you know, just kind of seeing how they did that with the county.
Yeah, and with the association, if it's, you know,
Right.
Watertown Beach and you've combined 2 smaller lots, you just want to make sure that the association has approved that, or if it's even necessary for them to approve it, because the restrictive covenants will kind of detail, you know, if you combine 2 lots, what happened to the association assessments? Are you paying 2 assessments, or are you just paying 1? Or
Right.
those are things that a little bit of homework there to look at.
Yeah. Yeah. Man, this is good. I think that
I'll add one more thing.
Yeah, please do.
That just occurred to me. As you know, it's very important when you get down close to the Gulf that one of the great marketing pieces that you have beach access.
Yeah.
Right? And things are marketed with beach access. They might not always have, you know, what is beach access?
Right.
That's kind of a loaded question.
Right.
But from a title standpoint, you can get added to your policy an easement. If there is an easement giving you beach access, you can get that added to your title policy. They can insure that easement. Now, you and I both know that an easement to the beach doesn't necessarily give you the right to go put up a tent once you get to the beach. I mean,
yeah.
some of those are a 5-foot slip to the beach.
Yeah.
You got to walk all the way down to the wet sand to walk back and forth. But
yeah,
that's another issue.
Well, are you meaning like, because a very popular thing, especially with everything that's going on right now, and I'm having to do another updated video on this whole beach access thing, because you're right. I mean, easement is basically, I can get my feet on the sand from this location, and then from there you have to go explore in a lot of cases. But are you meaning like, even if it's you're in a community and they have a deeded beach access across the street, or would this be just for individual lots that have their own easement to the beach?
I think that's both.
Both. Okay.
And the underwriter's got to approve it, but that's something that we've been asked to do before. And so we look into it. Now it's probably going to require a survey showing where that easement area is. And so you have a picture showing where the easement is for them to ensure. It's usually a meets and bounds area, and it access to a lot. You know, some lots you have to access over somebody else's property to get to the lot, and so we can ensure that access as long as it's a valid easement. I mean, we have to do the research on it, but that's something that a lot of buyers don't realize we can do, and I don't know that everybody. Other title insurers and title companies can offer that. I don't know if they offer that service or not, but they're certainly capable of. It's not something that we can do that nobody else can do.
Right. And so, yeah, that's tricky. I mean, it's just we're getting more of our, you know, you remember a time too, we weren't really talking about these beach easements and access at a point. Now it's like the first thing we're checking out, and I've had to become you know, and then some of these places have these separate beach access agreements with the community in front of them. I mean, there's all kind of paperwork out there, you know. it's you got to go inspector on this stuff to figure out where you can sit down right now and where you get out to. And I get nervous about advertising it on MLS unless I've just done the full background on it, because I've seen people throw some stuff out there that just, it's not there, you know.
Well, it's not there. You're right. You hear you hear that they have beach access, then where is that piece of paper that gives them access? It isn't necessarily in the public records. It should be,
Right.
but they need to do their homework on that when you get something under contract and they're telling you have access to something.
Yeah, because I found one of them didn't have it in their community, but the neighboring community that was giving them access is the one that had it. So the community itself didn't have it, but the one across the street that was giving them access had it in theirs. And it's like, man, this isn't even the neighborhood we're buying in, and we're having to rely on their covenants that was giving them access. Right. So it's like, yeah, man, this is what I'm talking about, though. And that's not necessarily, these are just things that come up with just good research. But I guess my point today is we use it all the time. I've used you guys for years because 90% of our stuff is smooth and nothing ever comes up. Maybe 5 years down the road, maybe I don't even know about it. But when stuff does hit the fan or when things arise, that's why I like using you guys, because I know we can get a handle, but also know that through the process, the vetting process up front, we're going to shake out as much as we possibly can. So to avoid those situations down the road. And I just think unfairly, title insurance is kind of looked at as a necessary evil that just either the buyer or the seller has to pay, but they don't appreciate it until somebody knocks on the door one day and they got to come up with something.
Yeah, well, we certainly appreciate you and appreciate working with you on a regular basis. We're human. We're not perfect, but we got a lot of experience. We got a lot of bumps and bruises that we've learned over the last 20 years or so. And our staff a lot of our real estate closers have been doing it for 15, 20 years as well. So we've seen a lot. And, what I like to say is we might make a mistake here or there, but we're here to correct it and make it work when that does happen.
That's my motto too. I don't have a tattoo, but that might be the one I get. I'm going to make a mistake, but I'll call you. We'll get it fixed. That's life.
I'm not going to get that as a tattoo though.
Kirby, man, thank you for doing this. Something comes up new in that world, we'll tap you back, or if some more questions come my way. But this is a big one, just kind of an overriding one that I appreciate you doing. And then I know that you're open to anybody giving you a call that might be encountering anything out there on their property or whatever else.
Absolutely. Thank you, Casey.
Awesome. Kirby, thank you, brother. Talk to you soon.
All right, good. Bye-bye.